And with that, let's just go ahead and jump right into it. I know we have a lot to cover today. And this session for this month in particular is around consumer digital identity. We'll be having a research report going out with a similar topic in the next couple of weeks here. So definitely stay tuned for that. And I want to welcome our typical guests for our State of Identity Forum. We have Dave and Cameron. Welcome, guys.
Howdy.
Howdy. I guess we're going with howdy these days. Howdy, Cameron. Howdy, Travis.
Oh, hell, well, I mean,
howdy, listeners.
Dave, you're in Connecticut. Why don't you tell everybody about how Connecticut's going?
Connecticut's going very well. It is 85 degrees here today and sunny, so peachy.
That's lovely. Cameron and I will keep New York City sweaty and trashy for you.
Thank you.
Well, let's go ahead and jump right into it. So looking at May, this has been a shorter month for us. Obviously, typically we do this as the last week of the month. So we have one last week to look at some of the activity, but we've seen a lot of really great stuff happen already this month. Some of those shakers or movers and shakers that we want to call out are Arcos Labs, Persona, and Hello Soda. Arcos Labs here raising $70 million. We're going to be talking a lot about what they're going to be doing with that money here shortly. Persona landing $50 million, obviously a darling in the identity verification space, have been kind of on the tip of everybody's tongue now for a couple years. This is following a big raise and announcement from Verif, which we covered last month. And then Hello Soda being acquired by Accuent, which is very interesting. Hello Soda hasn't been around all that long, but I think this is a really interesting acquisition from Accuent. I think this definitely expands some of their capabilities within the KYC segment, as well as within certain regions such as APAC. And some of those other notable deals that were out there were first the Honor Lock, which is raising about $25 million to help with online exam proctoring. We're going to talk about why that matters here shortly, but it is an interesting investment. Then we have Visible Risk, that joint venture between Moody's and Team 8, bringing another $25 million to the table for those guys. And then Rails, which is $12 million to help that API development. But specifically, if you guys aren't familiar with Rails, data aggregation company, pulling a lot of interesting information from a lot of folks and building out risk and fraud scores. And let's go ahead to the landscape here. Arcos Labs kind of being the first one. And Arcos Labs for us fits very much squarely in this fraud prevention, risk management, and authentication space. Of course, they do several other things, but I think they really kind of land here. So let's just kick it off. Cameron, what are your thoughts on Arcos Labs just raising $70 million? Obviously, have a lot of capital to play with. This is a company, 2017 was at our first conference in DC. I mean, we watched these guys grow. What do you think about this investment? What do you think about this company?
I think it's a sign of things to come. I don't want to step on some of my fields of dreams call outs, but I think we're seeing continuing evolution and interest in this authentication anti-fraud space, specifically around, how do we identify who is a human being, who is a bot. Obviously, Arcos has a pretty strong offering in that area. One of their key competitors is Google, which, depending on where you view Google in your own competitive landscape, you might not want to be letting Google sit in between you and your customer. So I think it makes a lot of sense. I think we're going to continue seeing increasing demand for these types of services that Arcos is offering here.
Yeah. Dave, what are your thoughts on Arcos? I mean, obviously we talk a lot about behavioral biometrics, which is a bit different than what Arcos is offering here, but general thoughts on, maybe I should add these guys to the UEBA segment, but general thoughts on Arcos and the money kind of pouring into companies like Arcos.
Yeah. I mean, look, as an investor, I go and look at who was the lead investor on this round. SoftBank Vision Fund. SoftBank, the Vision Fund has been through, it's been a saga, right? But the thing that they've gotten really, really, really right is the explosion of e-commerce and sort of like digital consumer platforms. So this is a group, that's totally got the size of that market right. Certainly COVID was kind of this unanticipated event that validated a lot of their market sizing analysis, but it's not surprising to see SoftBank, putting $70 million into a platform that's really tied to e-commerce and some of the digital delivery platforms. So to me, it's just, more validation that, this market opportunity is much bigger than most people thought it was a few years ago. So to me, that's the big takeaway.
Yeah. Well, let's definitely keep an eye on these guys. We have been recently approached by several companies very similar to Arcos Labs, raising money or potentially exiting or right. So there's a lot of activity happening right now in this. It would be very interesting to see where this goes and how Arcos Labs performs over the next 12 months leading up to ideally their next round. Well, with that, let's move to Persona. This one crosses that boundary between IDV and identity proofing. And I know they do a couple other things. I know they have big dreams for how they're going to deploy things from an analytics standpoint, behavioral analytics standpoint. They can probably even be added into some fraud prevention, risk management side of things. But when I think about Persona, when I evaluate them, when I look at them on a map, they really cross this identity proofing and IDV document verification space. Very clean user experience. I recently found my old Coinbase account, which both Dave and Cameron have heard way too much about recently. And I had to reset my password and got to go through the Persona flow. And I thought it was quite lovely. For one of the call outs here is we are actually seeing this kind of shift between proofing and identity verification. A lot of the IDV companies that were solely doing kind of a 2x2 check and maybe capturing a document for authentication purposes are now up-leveling that for higher assurance use cases. And so a lot of companies that were previously bucketed into the IDV side are now moving into proofing. So I see Persona kind of filling that gap there, that telling that story to investors, getting buyers used to this story. So I think this is a pretty good investment, pretty good outcome for the Persona team. Cameron, what are your thoughts on Persona?
I think one of the key takeaways here, just in terms of, noting that we kind of have them in this no man's land, if you will, between IDV, doc verification, and identity proofing. I think Persona embodies this continued trend that we're seeing in terms of the merging, if you will, of the document verification and identity proofing market segments. When we drew up this landscape, I think there was a lot more differentiation between platforms that were looking to do something as pure as a document verification point solution as compared with something more robust in the identity proofing space, where you're actually tying that document to an identity, typically using biometrics and kind of sealing those together into a digital identity. I think the days of document verification as a standalone solution outside of proofing are on the wane. And this Persona round is emblematic of continued demand for platforms that can both verify documents as well as tie them to the existence of a physical person and give you a higher degree of assurance as to, whether or not that person is actually, behind that device. I think additionally, like some of the capabilities that Persona has and where they have really kind of leaned into the strengths of their platform around orchestration, around low code, no code, around elegant UX and, high quality user experience, not only for the consumer, but also on the back end in terms of delivering meaningful dashboards, meaningful data, kind of easy to configure flows. Really points to where we see leaders and fast movers in this identity proofing space going as well in terms of product.
That's a fair assessment. Dave, what are you thinking about Persona here? And also, I guess since we did put them in that kind of border town area, what do you make of kind of the shift of IDV companies merging into identity proofing?
Yeah, I mean, look, I think identity verification, document verification, those are point in time, single transaction events. You're part of the front door of, a customer onboarding to a platform, onboarding to a network. So anything that you can do from a business, like if you're going to own the origination of that relationship, you should be thinking about strategically, what are the logical features or other products or services that you can bolt on to capture even more of the sort of identity wallet or the identity spend of the platform that you're serving. For me, if you read personas, some of the write-ups, whether you go to like TechCrunch or you look at some of the press they did around the round, they're using a lot of language that sort of applies that. They're also looking at things around mobile identity and device intelligence, potentially also some language that implies some behavioral biometrics, maybe even some behavior, consumer and behavior analytics. So to me, which is going to be interesting is to see how a player who's really IDV and proofing first starts to bolt on to these other services. Can a company go from identity verification or really onboarding, and is that then a logical way to then bootstrap into even more of the authentication services or authentication spend in wallet, or are platforms that are in authentication going to go the other direction? So to me, that's going to be interesting to watch how Persona really expands their market and what their product roadmap looks like, over the next kind of couple of years.
Yeah, and I think that's a really good point. And, we'll probably be able to take a few signals from the Jumios and MyTechs of the world. Obviously, they are also in kind of that similar transition with probably bigger enterprise value and able to have access to capital a little bit easier. So it's gonna be interesting to see kind of how, where each person or where each company goes first, and how does that actually work out for them. And similarly, the companies that are in the behavioral biometrics, authentication, customer IAM space coming down in this landscape to also do those things. So there would be kind of emerging there. Well, let's move on to Hello Soda here. This is a company, like I said, been around for a couple of years, not too long, but a company that did take on quite a few things in terms of their product and serviceability and what they were out in market doing. I've always known Hello Soda as a KYC player, but they do a bit more than that. I think this is a good acquisition for Accurate. Not so confident or sure on what Hello Soda's numbers were for this particular acquisition. They were undisclosed, but I think this is a good pickup for Accurate. They need to continue to do stuff that's different than their peers to continue competing. Obviously, we're going to continue to probably see more and more of these types of acquisitions of KYC players as the market expands and becomes kind of more consumer centric. But Cameron, I'm going to lead with you on this one again. What are your thoughts on Hello Soda and the acquisition from Accurate's side?
Yeah, I mean, I think we're going to, as you said, expect to continue to see some consolidation in the KYC space. I think thinking strategically, my understanding is Hello Soda had a fairly strong APAC footprint and also had some interesting dark web scanning technology that I think plug some interesting gaps that had existed in Accurate's product suite, as well as adds on some global reach for their platform. And, again, to this note of consolidation in the space, we expect this trend to continue as competition increases. And I think some of these smaller players are going to find themselves a bit squeezed as, there are only so many vendor platforms that can exist in this KYC space. And we've had, I don't know if folks have been checking their crypto accounts lately. Maybe this crypto bull market is coming to an end. Some of these retail inflows and a surge of new accounts might be declining. And I think for Accurate, that I know has a pretty strong position in that crypto space, this might offer them some diversity in terms of the types of businesses that they can have relationships with. So serves as a bit of a buffer to make sure they're not too tightly hitched to this crypto train.
Yeah, Dave, what are your thoughts on this before Cameron starts talking about diamond hands and other types of crypto things?
Look, I think just to generalize, I think the point he made, which is, identity is an intermediate good, right? It's an input into other services that consumers use, and so a big part about how how M&A is going to play out and investing is going to play out on the space is kind of what are the end markets you're serving. Some of these end markets are now pretty mature, and the channels through which enterprises or companies or platforms are meeting their customers, those are mature as well. So it's just only natural that we would start to see some consolidation in the space as companies look to rationalize like the number of vendors that they have to work with in order to service their customers. Like that's just a natural thing, and we're going to see that play out in certain markets now. And some of that may be financial services and sort of capital markets, and then we'll see how it plays out in e-commerce, whether it's e-delivery or food, whatever that is. Like those markets, as those markets mature, we're then going to see consolidation in that sort of intermediate layer as well.
Yeah, I think I definitely don't want to keep stepping on the Fields of Dreams segment that we keep referencing. If this is the first time that you're dialing into our State of Identity forum here, at the end of the session, we will talk about our predictions for the future. And I believe there's a few folks on this call that are starting to leave some subliminal messages here. But let's move on to HonorLock. HonorLock, interesting company, not necessarily an identity company here. But I think one that's quite interesting. We if you're not familiar with HonorLock, neither was I before the announcement. Obviously, Dave and Cameron had already kind of heard of these guys, but they help proctor exams. Basically, they stop cheating on exams from home or outside the classroom, right? Simply put. And they do it in a number of different ways. They're a little bit cagey on their website with how they do it, but from what we understand, it's typically they're doing some form of identity verification with the student ID, as well as multiple points of authentication throughout the proctoring. So pre-exam, during the exam itself. So listening for voices, doing voice biometric scans, as well as other devices nearby. So kind of interesting stuff there with HonorLock, maybe a little creepy, but I think what it does is it shines some interesting light on use cases. So with this one, Dave, I'm actually going to turn it to you first. What are your thoughts on HonorLock? Obviously, you and I had some conversation about this before, but for our audience here, what are your thoughts on these guys?
Yeah, I mean, I think this is one where it's important to take home the lesson that differentiation through a niche is kind of a core strategy that we're going to see more and more of. To kind of call back to another company that we talked about in a previous forum. ID.me, right, really started out with verifying one claim, which is veteran status for loyalty programs in an e-commerce setting, right? Like, you want to offer a veterans discount, how do you do that? And now ID.me, by really focusing on that one specific niche of users and that one use case, was able to develop a network effect that accelerated their product, really improved it to where now they're moving into adjacent markets and are really considered probably one of the strongest players right now in identity verification, right? So HonorLock is an interesting continuation of that trend, because now we have a niche that probably not many of us were thinking about, authentication for student examinations. I would say, for a couple of years ago, if you were at the no identity conferences, right, and you walked down Start a Forum, you saw just an explosion of companies talking about how they were going to use biometrics for payments. And why? Because payments is sexy. There's a ton of money there. Everybody wants to get into payments because then they think they're going to be bought for $10 billion, by Visa or something like that. Mm-hmm. And I think most of those companies haven't been successful, right? So those are really crowded, competitive, hot spaces, and it was tough for a lot of those companies to differentiate. Here's an example of somebody who's said, look, I'm going to go fish in a different pond, use whatever, I'm going to be a big fish in a small pond, whatever, metaphor with, water that you want to use, right? Like, the point is that sometimes pursuing a constrained niche can actually be the path to building a very big company. And so this is one that I'm interested to watch, because it's a continuation of this trend that I'd like to see more of personally.
Yeah, Cameron, what are your thoughts on HonorLock?
I think it's a really interesting platform. I think I've had my eye on education for quite some time as an area that seemed like a very obvious entry point into digital identity in terms of someone looking to build an ecosystem around trusted identities that maybe don't have a tremendous amount of initial value in some ways, but can mature into really high value assets. I think students are a really perfect use case for digital identity in that regard. Like when you come in, students need to be, onboarded into these institutions, and you have a bunch of attributes that are necessarily required to be tied to you. Things like whether or not you graduated from a certain institution, what your test scores are, do you hold certain, attributes around your educational identity. And so it's always been a really fascinating space for me. And I think to your point that these guys aren't necessarily a digital identity platform as they sit right now. But maybe what they will do is turn what they have built, the start of these digital identities that they're forming when students onboard onto this platform, into something greater. So definitely really interested to keep an eye on them and where they decide to spend this money in terms of further developing their platform. Because I think if you know something about someone, like, okay, they went to this institution, you can really turn that into a really powerful base layer of digital identity if given the opportunity.
Yeah, it's like everybody that we used to work with at Deloitte, I go on LinkedIn now and I'm like, oh wow, I didn't know all of you went to Harvard. It turns out they actually just got a Harvard certificate while they were at Deloitte, right? So I think that there's a lot of these credentials that are out there floating around that are a bit misleading, and there is a real big need for education verifiable credentials. Obviously, Learning Machine, Dave, one of your successful companies in your portfolio that how long was it, a couple of years ago they exited now?
They exited just over a year ago. So
Over a
that
year ago.
acquisition closed January last year. So that was Highland Software. They're certainly having success as well.
Yeah.
So
I just think it's such a great use case, and it definitely impacts everybody, not just going through school, but also post, right? Well, let's keep it moving.
It's also an interesting point in time to be, acquiring people, in a user journey. That inflection point, part of that thesis was also, the inflection point from, graduating school and then being onboarded from an employment perspective. And so I am intrigued to see how, different wallets or educational credentials are used, because it's really the beginning of sort of your professional identity, right? Like that transition and how those are verified. And are there other services that you can build around that reflection point and that unique set of sort of read writes that incur at that point in time?
Well, yeah, and just to, I guess, put a pin in that last bit, we talk about kind of carrots and sticks when it comes to incenting, consumers or individual users to join a platform. There's really no better stick than, hey, you need to sign up for this test proctoring platform or you don't graduate, and all that money you paid for tuition is effectively useless. So I think they will be able to see some success in terms of making sure that the target users of their platform actually, create identities within their system.
Yeah. It's always an interesting conversation when we talk about carrots and sticks with digital identity, right? But let's keep moving on here. I know we got a bunch more to talk about, but the next, we have two more companies. One is Visible Risk and the other is Rails. First is Visible Risk. Interesting company. It seems to be more of an advisory firm, plus, right? Having some technical capabilities as well with post kind of onboarding the customer here. And they're creating cyber risk scores. So it's more of a risk management tool. If you guys aren't familiar with Visible Risk, really interesting, cool stuff here. They're trying to build out a risk score similar to a credit score, right? Which makes sense because Moody's is one of the big joint venture partners in all of this. Cameron, what are your thoughts on Visible Risk and this type of product, right? Trying to create new scores, looking at the enterprise security, and trying to build something more quantifiable around the security scores.
Yeah, I think, look, it's a really interesting platform. We had some debate in terms of where we wanted to stick them. In some ways they're playing up in this upper right portion of the map as well, thinking about network and infrastructure security, endpoint security, identity of things. So they're touching on some really interesting areas of the map. When it comes to the scoring aspect, I think that's where they're doing something really cool, which is, again, trying to take a bunch of different signals around identity, around the cybersecurity posture of an organization, and distill it down into actionable insight. You might, in some ways, call it an orchestration layer. I know orchestration, big buzzword of 2021 that has been bandied around a lot. And I think this is indicative of the demand at the enterprise level for tools that help them kind of make sense of what is becoming an increasingly complex digital identity and risk footprint. You still have point solutions that are all over the place. And whether it is vendors that are looking to pull multiple types of point solutions under a single orchestration layer, whether it's an orchestration layer that sits on top of multiple point solutions and helps you make sense of those through a single API or a single interface, or almost more of a consulting adjacent product like Visible Risk that allows you to leverage their tools and they sit alongside you and help you understand what they mean. I think this is all indicative of the fact that this surface, if you will, of digital identity, cybersecurity risk is super, super complex. And folks are looking for things that help them, make heads of tails of what their posture is, because without a unified view, it's really easy for things to slip through the cracks, risks to not be mitigated and instead to multiply.
Yeah, I think that's a really good point, Cameron. And I know we want to skip over this next part to Rails. I know we got to keep moving here. Rails, also a very interesting company here. This is the real-time accounting data company building out APIs to get a hold of some of that data, clearly sitting in that data aggregation as well as the fraud prevention and risk management buckets. Dave, what are your thoughts on Rails and this space in particular?
Well, look, I mean, I think, products that are focused on developers, modularity of services that can be delivered through APIs is a trend that I think is still going, probably still has, a decade to run. Maybe a decade's a little ambitious, but, Auth0 was probably just the first of a trend, the first company that really spotted that trend, the importance of, delivering identity through APIs. And now we're just going to continue to see, every other service that is in the honeycomb. There is going to be a player that's going to figure out how to deliver those things through APIs, and like literally every single piece of this honeycomb. I think there's probably a company pursuing that strategy. So, if you're a savvy entrepreneur and you're looking at one of these honeycombs and you don't see somebody doing that, that's probably an opportunity and a gap in the market. And you should think about either why somebody hasn't done that yet. And if you can't come up with a good answer, like maybe that's you, maybe you're the one who should do it. So, yeah. Fits in with a theme that we're seeing, more broadly in the venture capital space and startup space.
Yeah, I think that's very spot on, and also a really good, call for some of those entrepreneurs out there. Like while we talk about every month, we pick 6 to 8 companies to talk about movers and shakers. If we were to look at this map here and actually, map everybody on it, you can see where, we are seeing a lot of the same segments getting a lot of investment. And if you go back to the older videos that we have, which, you can definitely check out on our website as well as our YouTube channel, which we'll talk about here in a second. But if you go back to those older videos and you check out where the investment's coming in and where those deals are being made, there's a lot of commonality between these, and there's still a lot of opportunity, even in areas that are being flushed with cash, just as much as areas that aren't flush with a lot of cash. So definitely something to be thinking about as an entrepreneur in the space. And with that, before we get into our next session on the U.S. executive order on improving the nation's cybersecurity, Kristen is demanding that I tell you all about our brand new revamped YouTube channel. So if you guys go check out our YouTube channel, it has our videos, has this video that you guys are watching on it right now. You guys can go check that out once this session here is recorded and put up there. But you can check out our YouTube video as well as all of our old video and content, as well as if you maybe you don't have time to always be coming and watching these videos live. Great news. These are going to be podcasts going forward as well. So this will be coming through the State of Identity podcast channel. You'll be able to listen to these sessions on the go as well. And if you guys want to check out more about that information, you can go check that out at no.oneworldidentity.com. And so with that, moving on, we are going to talk about the U.S. executive order. We have two major topics we want to talk about today. One is this, the U.S. executive order. And two, we want to talk about how big tech is using privacy maybe to their advantage, whether it's a competitive advantage or not. We're going to be debating that a little bit here. So to jump right into it, if you guys aren't familiar with the executive order on improving the nation's cybersecurity, this was signed on May 12th, 2021. So very recent, and it is intended to do these several things. You can sit here and read them, but basically there's a lot of money going into this space. There's going to be a lot of effort to improve the cybersecurity around our infrastructure here. Very common with not just cybersecurity, but all the infrastructure bills that this administration is signing and putting into effect. This is also going to be one of those very, very big bills that we will likely talk about, or very big orders, executive orders that we're going to be talking about for a very long time. We in the identity space have been calling for a lot of better standards. NIST 863 standards have been very good and something to point at for guidance. We're looking to obviously continue to build those out, to use those for more than just the identity proofing use cases that we look for right now, but also a lot of other things in this bill to definitely cover. And yes, I'm going surface level because we're going to be talking about this here in a second. But why now? Why is this executive order coming up today? Well, one, I think we all know about Solarwinds. We've mentioned it a few times over the last month or two. And as we evaluate Solarwinds and the impact that this had, we realized it basically touched everybody and anybody it possibly could. This thing is massive. It's still probably undetermined on how big the hack actually ended up being, but just to kind of call it, some of the U.S. agencies, Pentagon, Homeland Security, State, Energy, Nuclear Security Administration, and the Treasury, as well as many of these private companies like Microsoft, Cisco, Deloitte, Intel, et cetera. So very, very big impact, touching a lot of things. And while we're all talking about SolarWinds, then the Colonial Pipeline hack happens, $4.4 million in a ransom goes out the door. And this just shows how easy it is for some folks to be able to target the infrastructure in this country. I saw a bunch of people with pickup trucks hoarding gasoline and selling it on the side of the street. People do some crazy things when our infrastructure starts to break, right? And so cybersecurity is one of those areas that we need to invest in. This executive order really kind of shines the light on that. And with that, we actually connected with Ross Nodurft, the former principal of cybersecurity here at OWI, now the senior director of cybersecurity services at Venable. Cameron, you met up with Ross. Do you want to just kind of preface your conversation and then maybe we can jump into the video?
Yeah. Ross obviously deeply knowledgeable about cybersecurity in general, but particularly this intersectionality between cybersecurity and the Biden administration, what the federal government is doing. So we talked about a few things, and maybe we'll be able to release some of these other excerpts from the great conversation we had. But in particular, leading into this clip, I had asked him about some of these critical intersectionalities between digital identity in particular and this latest Biden administration executive order.
Great. So let's jump right into it.
So Ross, in terms of digital identity, there's some specific provisions within this cybersecurity order that really, I think, bring digital identity to the forefront in ways that maybe haven't been done previously within the executive branch. Can you talk a little bit about this impact specifically on digital identity?
Yeah, I think it's important when we take a look at the digital identity aspects of this and how it plays into the broader zero trust conversation, that it's actually being addressed pretty directly in this executive order. There's an understanding that agencies right now have started to move in the direction of adopting multi-factor authentication across their enterprises. But there's also the recognition that there are a lot of different disparate use cases that can't just be solved by broad adoption of PIV CAC card, right? You have a PIV card, you have the second factor that's the PIN, and that only goes so far, especially now that we're in a time where in-person proofing is a lot more challenging. So I think there's a policy M1917 that loosened the reins a little bit on what it meant to really provide secure multi-factor authentication and what agencies were allowed to use. And I think that's going to enable agencies to kind of meet the demand here. What the executive order says is within 180 days, agencies shall adopt multi-factor authentication and encryption for data at rest and in transit to the maximum extent consistent with federal records and laws. So what that means is agencies that have done significant work to get their folks to a certain level of security using the PIV and CAC card, they have to complete that life cycle, right? So a lot of agencies we see are in the 80%. So there's another 20% delta that a lot of agencies still haven't hit because those use cases are hard. And they've, again, been made even harder through the virtualization of the workforce. So I think we're going to see especially some enterprise ICAM vendors and identity as a service providers really be in a good position right now to take advantage of helping agencies plug those holes, plug those 20% holes across the federal enterprise right now.
All right, Cameron, I think that was really, really interesting what he's saying there. You know, to kind of maybe expound a little bit on the rest of the conversation, were there any other nuggets from your conversation with Ross? I mean, it seems like he's of the mindset that this is a really big deal and that there's going to be some significant impact to this.
Yeah, I think one of the main takeaways was specifically kind of the teeth that were put into this executive order. There's very well-defined timelines for when some of these changes need to be implemented by all government agencies. And if they miss those deadlines, there are, reports that they must issue explaining out exactly why they haven't hit their mark and when they plan on it. So obviously, I don't think you can say with a certainty that every agency is necessarily going to hit these deadlines. But they really crafted this EO in a way that they expect full compliance sooner rather than later. So if you have any friends in this space working on government contracts, you might see them chalking some longer than usual hours to try and hit some of these deadlines, which are already coming up pretty rapidly.
Yeah, Dave, what are your opinions on this? I mean, obviously, as I think we've all had these conversations that said, like, we need to be doing something bigger with cybersecurity, especially around infrastructure here. This executive order comes out. It's a pretty fleshed out, detailed executive order with some details to it. So obviously something they've been working on and for quite some time. But what are your thoughts on this and generally what are the impacts to you as an investor?
Yeah, I mean, look, there's a couple thoughts here, and let me see if I can try to tie them all together. I continue to be amazed by how low or under adopted multi-factor authentication is. I think you also look at the history of sort of data breaches and kind of like what's catalyzing some of this now, right? I think one of the things that changes with this sort of pipeline, the pipeline ransomware, is like you look at most of the data breaches that have happened to date, whether it was previous government data breaches or what's happened with some of the credit bureaus or some of the different banks. Ultimately, I think those hacks were probably more economically impactful. Like the economic cost of that was far greater than what's happened with the recent pipeline, with the Colonial Pipeline. But the effects of all the other historical attacks have been very diffuse, very dispersed. So we don't feel it that much. Whereas now, for the first time, we have these pictures of people queuing up at the gas station, ridiculous things happening, people filling up for gas, people driving all around. You have gasoline shortages, which cause a lot of panic and hysteria. And so people are now really feeling this in a different way. So even though I think the economic cost of what happened of very recent days, I think it's going to compel and catalyze action in a way that maybe it won't before. If you go across the pond for a second, strong customer authentication was part of PSD2. And that deadline, I believe, has been delayed at least twice, if not 3 times. Travis, correct me if I'm wrong, was the original implementation deadline 2018 or 2019?
At this point, I'd have to look back at my notes. I mean, I think
look, I'll forget, but regardless, it was either 2018 or it was either September 18 or September 19 when 19. So it's been delayed, twice. Now we're seeing here in the U.S. the government saying like, look, all government, departments, 180 days, a strong deadline. I think I'd be surprised if that gets pushed back again. I think that's going to be meaningful, and I think there's going to be real action around this soon. I also think that because we've now consumer awareness of the importance of cybersecurity is also going to start to grow, and people are now going to be more, before, if you talk to people in financial services at banks, they'd say, why are you slow? What's the problem with 2FA? Why is adoption? Why is rollout so slow? And it's because, just how much it dings the NPS score. And so now, are people going to start to shift? Is there going to be a shift in consumer mindset to, introducing friction into my, customer journey? Before I hated that friction. Now I'm actually happy to see it there because it gives me this perception. Sometimes people would say it's security theater, but will it now create this perception of security that now I actually value in the mass consumer market? Where people are now much more aware of these threats because they saw all these pictures of people with gasoline canisters. So that's something I'm watching. I think from an investment perspective, is it going to now accelerate adoption? Obviously, as an investor, I've made some investments in the authentication space. Is this now going to sort of accelerate adoption of some of these newer products and services, which have both security and user experience benefits? So that's kind of, what I'm looking at from a both macro and then sort of actual investment.
Yeah, I mean, and I think at the micro level, right, at the consumer level here, when we talk about it, right, to bring it back to kind of the topic du jour of today, which is the consumer digital identity, you brought up a really good point. Hey, this is making this a meaningful event for consumers. Does this shift the narrative for when people do sign up for things? I recently got a chance to talk to multiple EID providers around the Nordics, right? I got Norway, Sweden, et cetera. And it's really interesting to see the adoption rate, right? You're talking about in Norway, it's 97, 98%, right? As soon as you turn 13, people everybody that turns 13 is super excited because they get a VIPS ID. Why? Because they get access to things, right? And so there's this consumer demand that's grown. And once you have a proper identity system, then you can do so many other things with protecting the nation's cybersecurity, as an example. So I'm fully with you. I think you took a lot of the words out of my mouth when talking about tying this executive order from a national cybersecurity issue to impacting the consumer on a day-to-day. I think it's going to have some pretty big impacts. And I will say, as if I'm putting on an investor hat here, I think there's already a lot of players in the space that can handle a lot of what's going on here. So I do expect that kind of demand that was already there to probably slightly grow, but basically the supply of vendors is already kind of plentiful in the market. So if I'm going to go talk to some entrepreneurs, I would look at this as, yes, there's some immediate opportunities, and you're going to be up against competition also looking at it. So just, double check your sixes, if you will.
I think it ties back to the point made about HonorLock, which is that there's a lot of players in this. So, certain parts of the market, this is a growth stage bet. So I think the growth stage investment firms are going to be very, very active in authentication. Obviously the beginning of the year, we've seen a lot in onboarding, which was really driven by kind of, the COVID acceleration of e-commerce and digital or e-logistics. Now I think what's next is going to be authentication. And I think for the most part, that is going to be a growth, the place for growth stage companies, unless you are finding and exploiting a niche that is currently underserved. So, I wouldn't just start a generic multi-factor authentication company right now, unless I knew there was a really specific end market that I had an idea to serve, that idea for a product that serves that market in a way that, like, you know, other solutions just don't.
Right. Let's keep things moving before Kristen gives me the light here. So, our next main topic for today is privacy as an anti-competitive tactic. I can almost feel some folks cringing or squirming in the audience right now at this sentence. I know when I wrote it, I thought twice as well. But I think it's a good question to ask. Is privacy an anti-competitive tactic for big tech? We're seeing a lot of rhetoric in the news. We're seeing a lot of responses from folks. We're seeing a lot of meaningful responses, right? Just a little bit of the timeline of events here on the left, which is, Apple branding themselves as a privacy-centric company in 2018, right? That's when you started. If you were in San Francisco, you would start seeing those little the Apple lock billboards all over the place. And then, of course, you started seeing those on TV. And then there's a whole ad campaign for Apple equals privacy and those types of stuff. But, they've also made some pretty meaningful changes to their product, right? And so recently they introduced their ability to easily revoke access to specific personal features in the iOS 14. So you can, obviously you're getting notified when people are starting to track things or what kind of data that they're going to have, but also now you can pull it back from them, right? You can spoof your email address and a handful of things, right? They're making meaningful changes to the App Store and to their products and services. Now, 3 years after Apple, Google earlier this week announcing their new privacy dashboard with the launch of Android 12. I think this is a really good indication that Google is also trying to play ball with Apple on the privacy front. As a former Googler and also still have tons of friends working on these products and services, I know for a fact that privacy is something core and central to their beliefs as people and what they're trying to build in products and services. But at the core of what Google makes money off of is ads, right? So thinking about how do you make this transition for privacy centricity while maintaining the revenue, right? The cash cow that allows you to have micro kitchens on every floor and good comp plans and things like that. Now, while Apple and Google kind of duke things out in terms of who's going to launch the next privacy dashboard, you have Facebook's CEO, Mark Zuckerberg, saying Apple may say that they're doing this to help people, but the moves clearly track their competitive interests. So Mark kind of makes a good point there a little bit, right? So that's really the main point of the conversation for here today. But before I open it up to our contrarian counterparts on the call here, we have a really great, interesting conversation with Dr. Gilad Rosner. This is a good friend, buddy. He gets to work with us on a lot of different engagements here at OWI. He has several books on privacy and technology that I would definitely recommend that you guys check those out. And Cameron, you actually met up with Gilad yesterday, right? So why don't you preface the conversation and then we can jump into the video.
Yeah, we were able to grab Gilad for a quick chat to talk about his perspective on, this Apple iOS 14.5 update, what it means. And in this clip here, he's talking about, stress testing in many ways, some key assumptions that we maybe have held a bit dear in the identity community around consumer privacy and consumer behaviors. So let's roll the clip with Dr. Gilad Rosner, and we'll dive right back into the conversation. As far as the industry perspective, it seems like this is set to have some pretty large impacts. I was in the park the other day with some of my wife's friends, several of whom are in the marketing space. And one of them point blank said, I don't know how to do my job anymore. When she, because the cross-app tracking was basically how they were doing their retargeting and attribution. It seems like the impact has been pretty pronounced already, and some of the data that I've seen shows that upwards of 90 to 95% of folks are opting out. Do we expect consumers to continue these behavioral trends, would you say?
So you may have heard of something called the privacy paradox, which has been floated around as a term for at least a decade. And is the idea that when probed, when surveyed, people express strong preferences for privacy, strong views, clear opinions. But then we were told that they behaved in different ways, that they would behave in ways that weren't as privacy preserving as the ways that they would respond to these surveys. And so they called it the privacy paradox. Now, what this change is doing is it is laying bare the idea that there isn't a privacy paradox. People did not have effective choice, and so they could not live their preferences. They had to live within the architecture of the systems that were created around them. Now, the way that the internet has been funded for the last 25 years in terms of it as a giant ecosystem has been advertising based, much like television still is and has been heretofore. And so this is a big change indeed. And what we're seeing is a first wave in this particular zone, which is just Apple and just advertising, where the users, having been given the affordance, the ability to be able to actually make a real choice around opt-in or opt-out, this is what they're choosing. And that's important. You know, the ecosystem has to take note, because up until now, they weren't given real choice. And so you couldn't actually detect whether they had a preference for cross-tracking or not. And now they're speaking.
Now, Cameron, that's really interesting where he's talking about the privacy paradox. And that is something that we have talked about quite a bit here internally at OWI. And I know we've maybe debated way too much at the bar with strangers about this. Clearly, you're still talking to people about identity at the park. You gotta stop doing that. You can't keep bothering people at the park about identity. But I think this conversation is really, really interesting. He's saying, hey, if people have a choice, they're choosing privacy, and that's showing out. What are your thoughts on this, and what else did you kind of glean from the conversation with Gilad?
Yeah, so just to add some early numbers that we've seen, one of the vendors in the space has called out that approximately 95% of all Apple iOS 14.5 users say do not track when given that pop-up. So it is effectively, put a kibosh, if you will, on a lot of the analytics and tracking data that was previously flowing out of the iOS ecosystem into the marketing ecosystem. And I think we hit on that a little bit more. We also hit on Gilad's thoughts on whether or not Apple is using privacy as an anti-competitive tactic, which I won't step on for this conversation. But I guess to kind of juice the pump here, I think it's a really interesting thing to think about in the sense that, Apple, as we said, fundamentally has a different business model than some other players in the space. And because of those profit margins that they enjoy from selling you the hardware, they don't need to monetize your data. I think I don't want to go around attributing, extremely generous motives to for-profit enterprises. I think Apple is making what they see as the best business decision. And I think we're seeing a similar choice with Google with the ending of third-party cookies on their platform. I think they saw that the risks to their brand and to consumer adoption of their platform outweighed the benefits, despite their reliance on advertising dollars to keep the lights on and keep the investors happy. So they have taken maybe a slightly less aggressive approach than Apple. But they have a new privacy toolkit coming up in the latest build of Android, and they have made tracking in Chrome a lot more difficult to do for brands. And to the anti-competitive piece, Google launching their first-party solution to the end of third-party cookies with, I believe, what they call cohorts, and then Apple, to the dismay of some in the marketing space, has turned on additional advertising options in places like the App Store that are really, more advertising dollars directly in Apple's pocket, which has rubbed some people the wrong way. Dr. Rosner made the point that, unless you can really prove that Apple is advantaging itself with data or cross-app tracking attributes that are not available to other players in the ecosystem, it's going to be tough to kind of, I guess, criminally, if you will, or in a court of law, prove that they're engaging in anti-competitive behavior. But I do think we are seeing, the natural result of competition in this space, which is Apple has attempted to differentiate itself from its other peers by saying, buy our products, we're going to give you more privacy. You're seeing Google respond in kind, and it's going to be really interesting to see, whether private industry kind of eclipses in some ways some of the regulatory pressures around privacy that we had seen previously with CCPA, with GDPR, with Virginia's data privacy legislation. And whether Apple and Google and some of those market forces really end up delivering more of a consumer privacy punch here in the US than the nascent government regulations have.
So, I mean, look, let me jump in. I think one of the things Cameron said, well, I mean, I've got a lot of thoughts on this, but one of the things he said is that, Apple's getting credit because they aren't monetizing data. And that's bullshit. Just to tie into another tech scandal that, we won't get into, but just to reference it, the author of Chaos Monkeys, who wrote kind of like the definitive book about Facebook and building their advertising business, and then also just kind of a broader critique on Silicon Valley, he was just hired and then unceremoniously fired for reasons, we don't need to get into, but Apple is now building an advertising business. They are monetizing your data. All they're saying is we're not going to let other people monetize your data. If you break the advertising market, what happens to your real estate? Your real estate becomes more valuable, right? It's just a simple scarcity thing. So preferred placement in the App Store is going to become much more valuable. Who's going to be able to now deliver sort of attribution analytics and all sorts of things about how do you identify, different user cohorts? Apple's going to be able to do that. Apple's now going to control the advertising market. In general, anybody who is offering moral critiques about monetization of data, I think it's just far easier to assume that they are a hypocrite rather than they actually have any real moral principle to stand on. Just look at the New York Times. The New York Times did something called the Privacy Project 2 years ago. They were doing all these exposés around using third-party tracking cookies. And what has the New York Times done? The New York Times has now gone out and built their own advertising business because the New York Times can afford to do that. And they're doing it with all the principles that they've been critiquing from both the reporting and editorial sides of the house. So just as a general matter, just assume that for-profit entities who are taking moral stands, just assume that they're hypocrites because they are. Right. So I don't give Apple any credit. Now, is it true that users want to, shut off third-party ad tracking? Do I question, that 95% of users are enabling this? No, of course not, because everybody knows, it's different around, two-factor authentication, but, a different point, everybody feels it. Everybody feels that their data is being taken from them and that they feel like it's some sort of violation, right? People feel that. So of course, if you give them, a very simple binary switch that's worded a very, very specific way that says do you want other people to violate you? People are always going to say, no, of course I don't want other people to violate me, right? But there's a business reason why Apple's doing that, right? And it's very self-serving. To reference, a different point that that I made actually previously, when Cameron and I, did a podcast. This is 2 years ago, but I was talking about Facebook and the stand of healthy advertising markets are actually very important, right? Because there's two ways we can pay for things. We can pay for things with our money, or we can pay for things with our time, which is I see an advertisement, and advertising is one of the very few legal ways to price discriminate. And what I mean by that is that you can charge a different user, you can monetize users very differently for the same service, right? And you can do that through advertising. So we can put people into Facebook puts people into socioeconomic cohorts, and they sell advertising against different rates. But ultimately, the end service that everybody's getting is the same thing, right? Facebook is the same for everyone, irrespective of their wealth or income, race, gender, all these sorts of things. Now, you can say different arguments about what goes into the news feed, and that's true, that is different. But as far as free messaging, free photo storage, free, these things, the service itself is ultimately free. And so I do worry that in the rush to judgment and the fact that everybody hates Facebook, whether you're, a Democrat or a Republican, like, one of the few bipartisan points of this agreement in society today is that, like, Facebook is awful, right? That in the rush to condemn Facebook, we're actually allowing other people under the banner of, some moral principle or standard, we're now allowing another, that's kind of a vector towards anti-competitive markets. And so that's a concern for me. I'm not saying that privacy is an important choice and transparency. Of course, those things matter, but so is a healthy advertising market. And we're going to lose something if that element of the market breaks.
So I guess I think both points are extremely accurate. First off, right? I mean, we've been working on these problems for a decade, right? I mean, just the folks on this call speaking, not even just the audience here. I see some of the attendees, right, that I know have been working on this for longer than a decade. It does seem like a problem that is being solved a little bit self-servingly, right? That's definitely, I think, is what it definitely comes off across as. If you're Google, you have to do something because you're the baddie, right? If you're Apple, you already own an ecosystem. You can monetize it and take advantage of it. If you're Facebook, you're saying, like, everyone hates us just like everyone in New York hates Bill de Blasio, right? It's there's two truths, right? It's like, it doesn't matter who you are, you don't like Bill de Blasio and you don't like Facebook. I get it, right? So it does seem to be like a no-win solution or situation for Facebook. It is going to be an interesting one that we are going to definitely be talking a lot more about. And I would ask all the people in our audience here today, as well as if you're listening to this on the podcast, if you're watching this on YouTube, drop in some comments, drop us a note. We want to hear what you're thinking on this, because this is an evolving topic that I think is going to have a pretty big impact and change for our consumer digital identity life cycle. But with that, I am getting the light, have to move on from this very interesting conversation. But let's keep moving forward here. So our favorite section, the Fields of Dreams portion of today's segment. We have about 10 minutes to cover this, so we're a bit behind right now. And if you guys don't know what the Fields of Dreams segment's all about, this is our future projections. What are we paying attention to right now as analysts and investors in the space that we're saying, hey, maybe we're thinking through some thesis, or maybe we have come across something pretty interesting. We're going to tell you about it. So that's what this section's all about. And with that, obviously we got some ball players coming out of the cornfields here. All right, Dave, you're up first here. So this is our digital identity lifecycle: creation, verification, authentication, authorization, federation. You have kind of a thesis right now. Why are we showing this here?
Yeah, so there's a couple things, right? Which is, how are these, if you look at each of these life cycles and what different enterprises are doing when they verify, authenticate, or authorize, there's a lot of duplication of services or overlapping capabilities that you have to procure for each one of these identity activities. And so what I'm wondering is, to what extent do you see consolidation and integration between those distinct modules, right? Part of that is, think about, an event of identity verification or onboarding. There's a lot of data and analytics that you're procuring at that single point in time that are then also relevant to both authentication and authorization decisions. And so, do you want something to just be a one-time expense, or do you want that procurement, that onboarding ceremony, do you want that to be the beginning of an investment in understanding a relationship and what a customer's profile really is like? And so, to what extent will we see continued modularity through APIs, and to what extent will we see integration and erosion of the distinction in that element of the stack? And then from an investor perspective, who is the, if that erosion does take place, or if you do see integration, who's the predator and who is the prey, and sort of how that market plays out. and then again, to different points, I've said at different points in time, which is which end markets will that make economic sense to have integration to have integration, and where will we see continued modularity through APIs?
Very interesting. And you are looking at a couple companies right now, or at least these are just representative companies. I should kind of mark here, but you called out Middesk and TrueWork. Do you want to talk about why these are the two companies you're looking at?
Yeah. So, two companies that are really focused on positioning specific things. Obviously, Middesk is focused on KYB, know your business. We've obviously had a lot of business owners and people who have done different things with startups. Everybody knows that things like opening a bank account, getting registered to do business in different states is just a really frustrating paper-based process. So, one thesis of mine, this was part of the learning machine process, investment thesis was anything that's done in identity through paper should be done through software. How do we automate those processes? So Middesk is another example of that. They're focused on a specific niche, one that I think is very big. And then TrueWork is really all about employment verification. And so that's another example where somebody has found a specific inflection point in a consumer's sort of life cycle where, hey, is this a good wedge opportunity where I can offer you some specific identity verification services or some specific, I can help you with verifying certain claims, getting onboarded to different counterparties. And then what's the sort of bigger business or bigger consumer wallet and services that I can then build and deliver around that. So both of these, we have people focusing on specific niches, which previously were paper-based, and it'll now be interesting to see what sort of broader, more comprehensive products that they build out with those users that they're onboarding.
Love it. No, definitely gonna be really interesting. And we recently covered Middesk in the last session or the session before. And if you're watching this and you want to hear what our thoughts were on Middesk at that fundraise, go check out that video there. All right, Cameron, we got this beautiful image. What is this all about? Why don't you tell us what you're looking at right now and what's coming across your desk?
Yeah. So, I was logging into my Chase bank account the other day and noticed that they had actually pushed me a two-factor authentication message into the Chase mobile app instead of the usual SMS OTP for two-factor authentication, which surprised me because, legacy financial institutions had been kind of some of the big holdouts when it came to moving away from SMS OTP, a technology that, longtime podcast listeners, fans of OWI will know has been, alongside the death of the password, something that has been predicted over and over again to limited effect. So it struck me as a bit surprising that, they had finally made the jump to app-based push notifications. And I think this may actually be a mark we look back on as, in the similar way of the notion of peak oil. We may be at peak SMS OTP. Don't get me wrong, I'm not predicting the decline of SMS OTP as a channel. In many ways, I do think SMS OTP is going to remain relevant for things like account opening, where you at the very first time are demonstrating the ownership of a phone number when linking it to your account. But I do think we may be at peak volumes in the sense that the use of SMS OTP as a form of 2FA for continual authentication as you log into your account for the second, third, fourth, nth time may finally be trending downwards as consumers become more used to interactions like an app-based notification. I think you can expect that most consumers now, probably at least in this market, have a smartphone in their pocket. If you're a bank or a major platform that has an app, that they probably do have that smartphone app as well, and that you will be able to rely on alternate methods for 2FA beyond SMS OTP. I know I called this out kind of earlier when we were looking at the landscape in thinking about, where players that do alternate methods of authentication can gain some traction. I think they are going to be the benefactors of this move away from SMS OTP. And I think this also ties into, what Ross was talking about with regard to this Biden executive order on cybersecurity. the tie to consumer digital identity from that piece, in many ways, I think is going to be government agencies pushing all of their employees to move beyond, factors like SMS OTP that are not NIST compliant. And while consumer platforms and government platforms are not always intersecting, I think in many ways you are going to see a positive uplift across the industry because all of those government employees happen to be consumers as well. And their familiarity with some more advanced, multi-factor authentication technologies, I think is going to serve as a nice tailwind for the adoption of non-OTP based ongoing authentication in the broader industry.
It's a really interesting take and obviously one that we've been monitoring now for quite some time. I mean, last year, we've talked about this a bit, but we got to evaluate several mobile identity device intelligence companies and doing kind of a VOC on this. SMS OTP not going away. In fact, still growing, not as strong as before, but definitely survived the NIST guidance to not use SMS OTP. Of course, they retracted that. This coming from JP Morgan Chase is very, very interesting. It's going to be very interesting in a number of different facets. More importantly, though, but you picked a couple companies that you think could potentially be kind of the beneficiaries of this change, which you picked CallSign and BioCatch.
Yeah. So, I think when you look at, again, where the puck is headed, so to speak, being able to allow your good customers, your good employees into a platform without burdening them for something like even opening a smartphone app. If it's a device we've seen before, if it's an IP address we recognize, if it's a browser fingerprint that we have seen before, maybe we don't even have to throw an app-based notification at them to acknowledge. If it is someone who we have some questions about, let's push them to the app. And then maybe, if it's someone who we really don't trust, we'll throw some even stronger levels of friction at them beyond what we talked about here. I think both CallSign and BioCatch extremely well positioned to service the demand from enterprises, and potentially government buyers alike for very robust multi-factor auth solutions that I think critically to this point do not require SMS OTP and in many ways are very friction conscious, putting the user experience first without necessarily compromising that overall level of assurance around who is behind that device, behind that session.
Yeah, I think these are going to be really, really interesting. Obviously, both companies, all these companies have been in the market, market news recently. CallSign, BioCatch, kind of behemoths in the space. We expect to see some big numbers from those guys coming out here shortly. And the last one here for today is for PI, which stands for Personal Identity Ecosystem. Hopefully, now that you guys see this delicious pie here, that'll be something you remember. This is something we dug into quite a bit when we were doing our Q2 kind of research on consumer digital identity, which we have a report coming out in the next couple of weeks of our findings for that. We worked with our partners TrulyU on it. We have some pretty good insights there that I would definitely recommend everybody checking out. But these personal identity ecosystems really represent this layer between the consumer and any identity service. If you think back 2018, 2019, 2020, with a lot of the product marketing language being used, it was all about, we're the identity service or the solution for the internet. We are the identity. We are the one identity platform for you. That product language has shifted a bit because a lot of companies have become more focused, right? They are focused on solving particular use cases. They are focused on solving particular customer needs. A lot of those early customers that they have, of course, have helped a lot of these identity companies figure out who they are today. And so we are seeing at this point a bit of a divergence between companies that are becoming integrated identity platforms, very similar to what Dave was talking about with the mashup of verification, authentication, authorization. And we're seeing companies becoming very strong point solutions, right? And again, looking at if you think back to our landscape, we have golden cogs, we have platforms, we have enablers. Right now, we're thinking about those companies that are golden cogs in this kind of impact here, or this kind of thesis. And for personal identity ecosystems, we're seeing companies with large adoption of their current products or service, typically digital adoption. So these are big tech companies. These are your Googles, your Apples, your Facebooks, your Amazons. These are your consumer-centric cybersecurity firms like Norton LifeLock and Avast. These are companies with hundreds of millions of users that have some form of digital interaction with you. And rather than trying to build identity services themselves, they're going to be partnering with a lot of identity companies in the future. And so I am very, very interested right now in this consumer digital identity thesis, specifically with the interaction and the engagement with identity companies and pies. And for me, I'm very interested in watching Sheer ID. So an e-commerce player that does identity, right? I think they do a handful of really, really interesting things. But one thing that they do is they've been able to support consumers with access to goods and services, similar to a lot of the ID.me conversation we had earlier with verifiable claims. Sheer ID is able to connect a bunch of the different identity attributes directly to the consumer discounts. And when we think about personal identity ecosystems, these guys are already doing it the way that the way that we are seeing some of these shifts happening. So I'm going to keep my eyes peeled for Sheer ID. They've raised a lot of money from private equity in the past. They are quite successful. They have a huge customer base. Really excited to see what Sheer ID is going to do and how Sheer ID and other companies like Sheer ID are going to play with pies in the future. So with that, I know we are a bit over here on time, so I want to just go ahead and thank everybody for joining us. And another just quick plug, we have a YouTube channel. It's wonderful. You can actually go check out all of our old no identity videos. We do post all of our no identity videos from our conferences from years past. You can check all those out. I had hair. I think Dave Fields had less hair. Cameron had the same hair. So you can definitely see the different years as we've progressed throughout those videos. In addition to that, you can see these types of videos on there as well. And so if you'd rather go watch us on your Apple TV through your YouTube app, check that out there. Also, this is now going to be a podcast. So every time we record the State of Identity forum, it will go through our State of Identity podcast. So if you're not already a subscriber to our podcast, which is hosted by the lovely Cameron D'Ambrosi, make sure you guys go into your podcast app of choice and click subscribe there. Big thank you to Dave and to Cameron, the guests for this one. And thank you all for joining. If you have any questions about OWI or want to get engaged with either from a business perspective or engage with us on one of these forums in the future, please do contact us at info@oneworldidentity.com. Thanks everybody. And thanks Dave. Thanks Cameron.
Thank you.